Why strategies that work on demo accounts fail on live accounts. Many traders find themselves frustrated when strategies that worked flawlessly on demo accounts fail in live trading. This discrepancy is common, especially for beginners, and can be attributed to several factors. 1. The get-rich-quick mentality. On a live account, the thought of making real money often clouds judgment. Beginners take greater risks, thinking that higher risks equal higher profits, hoping to become millionaires overnight. This greed leads to poor decision-making and losses. 2. Fear of losing money. Unlike a demo account, live trading involves real money, which triggers emotional responses. Instead of letting trades play out, beginners frequently monitor their trades, close positions prematurely in fear of losses, or trail stop losses too closely. These actions often result in more losses or missed opportunities. 3. Overtrading. Beginners often open multiple trades simultaneously in a live account, forgetting about margin requirements. This overtrading can lead to margin calls, stopping them out of trades prematurely. 4. Overestimating small gains. Trading with a small account and earning $5 to $10 daily feels underwhelming for many beginners. This dissatisfaction leads them to increase their lot size to flip their account quickly. Unfortunately, this approach often results in significant losses. 5. Constant strategy hopping. Consecutive losses in live trading can make beginners doubt their strategy. Instead of reviewing their trades and sticking to their plan, they switch strategies frequently, never mastering any of them. 6. Trading out of desperation. When the market isn't presenting clear opportunities, beginners often enter low-probability trades simply because they're eager to make money. These forced trades usually result in losses. 7. Neglecting risk management. In a live account, beginners often abandon risk management principles. They may risk more than they can afford to lose or ignore stop-loss placements, leading to significant drawdowns. 8. Emotional decision-making. The psychological pressure of real money introduces emotions like greed, fear, and revenge. Emotional trading clouds judgment, leading to impulsive decisions that deviate from their strategy. 9. Lack of patience. Many traders fail to let trades develop properly, closing winning trades too early out of impatience or fear. This cuts potential profits short while leaving losses to run longer. 10. Ignoring trading costs. On a live account, spreads, commissions, and swap fees can eat into profits. Beginners often overlook these costs, which makes it harder to stay profitable. The solution? Treat your demo account like a live account to build discipline. Develop and stick to a trading plan with proper risk management. Focus on consistent, small profits rather than overnight success. Manage your emotions and remain patient with your trades. Review your trades regularly and learn from mistakes without changing strategies too often. Success in live trading requires discipline, patience, and emotional control, qualities that aren't as easily tested on a demo account. Focus on mastering these, and you'll bridge the gap between demo and live trading success.